Hello, my name is Alexander Morari, and I'm the founder of ITKeyMedia. You've tuned into our podcast about Central and Eastern European startups that are in pre-Series A stage. And our guest today is Taavi Tamkivi, the co-founder of a company called Salv. Salv develops a SaaS-based platform that offers anti-money laundering, fraud detection, and cybersecurity solutions to the financial sector. Easy stuff, right? Hello, Taavi.
Hello. I'm happy to be here.
Look, you come from Estonia, which is probably the most productive unicorn farm by now in the CE region. Do you feel the pressure, or are you sure you'll be another one soon?
I feel the pressure, and I'm sure, yes. It is true that we have 5 known unicorns already now, and we have 1,300 active startups. So the ecosystem is pretty exciting over here, and definitely when I founded the company and then when I got investments and co-founders, then everyone is expecting to build something really important with us. So I feel the pressure, yes.
That's a great admission. I feel the pressure, and we are the next one. Interesting. Yes. What do you think is so, productive in Estonian startup landscape that companies are able to scale so quick?
Well, there are multiple things. One is that the Estonia as a country and as a market is really tiny. So there is no point to build a company which would focus on local market or on the Baltics market or on the Scandinavian markets. So everyone who is founding a company, they are thinking from scratch that, okay, here is good to test, and here is there are lots of smart people who can do engineering and product development. But there is no point to think that I'm going to stay here with my market. So that's one core knowledge that yes, this is a good place to start. And second is definitely the network. There are great stories, and these stories are true about Skype founders and the next generation which grew out from Skype, founded TransferWisers and Pipedrive and many other companies. And now these next level of unicorns, their early employees are founding their own companies. So small ecosystem, really supportive legislation. It's easy to if you think about small things like stock options for employees or things like that, it's pretty much tolerated over here. So that environment, smallness, and technical education, they all support us actually.
And so the initial value was in Estonia not being large enough a market for a company to get stuck in it for too long, right? Because all the rest seems to be a function of Estonia being a relatively small country. If you're successful in Estonia, then the next level you have to jump to make another quantum leap into a much bigger market and bigger challenges, bigger investment rounds, and so on, right?
Well, I wouldn't say it's even that direction of function. It's just three independent conditions which happen to fall together, because the original, the smallness is a great argument, and also the fact that we are the strength of the ecosystem comes also from the fact that the startups are usually not competing with each other. So everyone who's happy to support, they're not helping their competitors, they're helping their potential investments or friends or old colleagues. So there is no competition between us, which helps again to have this neutral and positive attitude over here.
Okay. Plus the fraternity or sorority spirit, right?
Yes, kind of that work. I know people that I can trust, and I've built great things with them in the past, and they want to support me, and I want to support them. So
yeah. So switching on to your business context, so to say, your platform is helping or dedicated to help to beat financial crime. And a little bit provocative, but anyways, I wanted to ask you, you're on a mission to build the technology to get ahead of financial criminals. Would you agree that to be able, to be ahead of financial criminals, you have to think in a way as financial criminals? Do you agree with that? Yes. And how do you teach yourself? How to educate yourself to think as cyber criminals?
Well, for me, it started back in 2006 when I joined the Skype's anti-fraud team. And there was at least one guy or a couple of guys in that team already before me who were thinking as a criminals, and maybe they had some gray background from the past, but definitely I learned from these guys how to think and how to catch the bad guys. And also in TransferWise, like when I was building my fraud and AML teams, there were people who, okay, they didn't have bad background or anything, but they were thinking, they were intellectually capable to put themselves into the criminals' heads and like trying to think, okay, how would these people think? It's like okay, you have maybe watched the criminal movies, or how police are super smart, the investigators work in that environment. So somehow some bits are very similar in this virtual world as well. So that definitely helps.
Yeah, interesting. Okay, let's move on to the scenario. I think we will use heavily words like AML, anti-money laundering, KYC, know your customer, maybe EDD, enhanced due diligence and stuff. And that's just for those not specialized in the area. Round one solution, Taavi, in a nutshell, explain what solution you are building.
Well, it's I would take a step back because like we as a company, we are pre-stage E, which means before A round, and we are still in the middle of product market fit search. So if you would ask like what is the product that we're building, I'm struggling to say that, to be honest. Like we have a couple of products and they tend to work, but before the product comes our mission, like beating financial crime. And there is our skills, like how exactly to do that in the commercial environment. So it's like there is a long list of really complex procedures and actions that need to be taken in order to beat criminals, in order to find bad transactions, cheeky customers, and like what is the exact product? That's already the secondary question. Like we're not one product company; we're building many things. But trying to answer your question more directly, we're offering two products, like and they're both based on data, like based on data that banks or financial institutions are gathering about their customers and what their customers are doing and what their customers are saying that they're doing. So like so just imagine there are databases, like in each bank there is like one or few databases which include data about their clients and transactions and like counterparties and so on. And the question is like how do you, and usually these databases are quite large, like there are millions and millions of rows or like tens of millions of rows.
I mean,
and you
true
somehow
big data, right?
Yes, really large data. Okay, it's like for me this is not too big. Like when I was working in Skype where we had trillions of calls, that was big. Like this millions or tens of millions, they're like quite manageable. But still, banks are struggling to find out which of these entries or which of these rows or which of these transactions are not the ones that should happen, or like are a bit strange. Maybe they don't have economic reason why this kind of customer should make this transaction back and forth, or why students should send millions or like tens of thousands, or why retired people should send money abroad into different investment centers. So basically, our clients are struggling to find out suspicious entries from their data set. And what we are helping to do is that with our product, we're making it more easier and more transparent and more visible how to find these suspicious cases. That's one side of things, but also the other is like if like many players in the market have their own databases, and just imagine like we have heard about criminal networks like mafias or modern mafias, like they are spreading their information, like okay, what are the banks which are the weakest and where I can enter the easiest. And like if I have 10 million like stolen money from, like if I've heard like earned 10 million from the drug trafficking from the streets, and I need to send them to my UK final bank account, or I want to like buy a house in French Riviera,
Yeah, legalize it basically.
yeah,
right?
basically then I need to use tens of different banks, right? And I'm controlling and I'm deciding, okay, through which banks I'm sending this data. And the other product that we're offering is that banks can join these suspicious events together. Like maybe for one bank it's not suspicious, or maybe it's not that suspicious. It's like one puzzle piece. But we're helping banks to join their data together in a way that they can share hints or red flags about these strange cases. And when they share it, then they actually see, okay, what is like the bigger picture, around this one transaction, around one customer, which helps them to find more crime. So it's like a list of products which are part of pretty complex work procedures, and there isn't a single like one point like that's the like magic bullet. It's more about like using list of bullets in row to beat this fight.
One of the bottlenecks, so to say, like pops up in my mind is the cooperation on data. I mean, data cooperation between banks. How do you think this is a challenge for the solution to expand beyond your current pilot program in Estonia? And would banks independent from each other, from different financial groups and so on, be open or motivated enough to, I understand, to not only cooperate on the data but also share a piece of data sets, right? Even if it's automated, even if it's like private data are well managed and covered and so on. Anyways, have you thought already that this might be a stumbling block to convince banks to cooperate on the data, which is their main, you could say, one of the main assets beyond financial?
Yes, this is a really good question, and this is like really interesting area or part of our work, because like the world is changing, surprise, and then also this data protection is something that everyone was super afraid. Like a couple of years ago, GDPR came in and everybody started to follow. In the banking sector, there is also Banking Secrecy Act, which is much older than the GDPR, which says that you're not allowed to share your customers' data with anyone without legal reason. And usually people are super afraid to share. But from as the crime and the criminal background is changing and it's influencing countries, like all the countries in the world, then the governments and also like global bodies like Financial Action Task Force, which is a global organization that gives recommendations to governments how they should like fight the crime. They are recommending more and more to exchange information between themselves, between the banks, when it comes to AML, when it comes to counter-terrorist financing. So like they understand that the public interest, like we want to live in the safe environment, right? It's not a question. The public interest overrides the individual like data protection, privacy concerns if you're suspected in something. And that's actually is changing right now. Like these organizations are coming up with new requirements and they are forcing and recommending more and more banks to change. So that's one argument why it's changing. Second is that technology is improving. Like there are like more and more modern technologies which can be used to exchange data in the safe way, so that you don't need to be afraid that someone third party would get access to them. So like you're okay to exchange data with the other bank, but you don't want to get hackers come across to that. So there are like nice privacy enhancing technologies, which is like a great industry which is growing. Like how to pass on only the relevant information without exposing too much. How to calculate these smart aggregates, which give you like idea about some total amount, but not the individual details. So that's a technical component, which is also enabling more and more this. So like we really see that we're in the really good moment of time, because and of course the third is the ambition to fight crime, because of the large like schemas that we saw here in Europe like a couple of years ago, last year and the year before. They have put the governments under the pressure by the voters that come on, you need to do something. Don't want to see these millions and millions or hundreds of millions being stolen. So if we would have done it 3 years ago, 4 years ago, it would have been too early. But now it's like super right time, thanks to these factors which are supporting that.
It seems like translating what you said about the expansion plans or opportunity. I understand that your bet is for the general legal framework to change in your favor, right?
Like almost, it's partially true, because like it's the legal framework is changing thanks to the public opinion, which has changed already, or which is changing, and then this is being driven by these AML scandals or money laundering scandals. So it's like the improvement of the legal framework is a result of these scandals, And like I keep bringing this parallel with 2016 when there were Panama Papers. So the journalists did a great work to figure out some details. Before that, like everyone knew that there are these shell companies in exotic islands, and this was like publicity thought they knew it, but they thought it's okay. Like they didn't care. Banks had a loads of like 10% of the business customers were coming from the offshore regions, right? It was okay. But thanks to this public opinion, which was changed by this news and leakages, which actually weren't surprised, right? After that, like 6 months later, banks had closed down most of their offshore companies' accounts. Legislation started to change a couple of years later, just thanks to this understanding that publicity had that, okay, we don't want to tolerate this anymore. And that's exactly something which is happening now in the AML world. Like 5 years ago, 10 years ago, people knew that the drug trafficking is happening, illegal weapon trafficking is happening, like illegal ivory trading and so on. But now, over these years, over the last couple of years, society has started to figure out that okay, it's not okay anymore. And that's what pushing governments, and the governments are forcing more the regulators. So the governments are writing out like more like better rules which help to carry the fight. Regulators and supervisors are pushing more pressure on the banks, and finally banks also, like CEOs of the banks. Think about Swedbank or SEB, like Danske Bank. When the negative news came out, their share price dropped 20% or 40%. It was like cost billions for their investors. So CEOs of the banks cannot take this risk anymore that they are like, they're not compliant or they are allowing some money laundering, and that's pushing them to make some more serious actions.
Yeah.
So again, that's another aspect which like changing the laws is one outcome of the mental shift which is happening now.
Yeah. As far as the mental shifts, by the way, as I see like recent GDPR legislation updates, is that there's imposing overall presumption of guilt for anyone, any entity dealing with data. That's how I perceived it. It created lots of problems for my businesses, and generally I translated it legally. It's just overall presumption of guilt. Do you think your solutions will also, the premise for the success of your solution will be an overall presumption of guilt, or it will be triggered only when there's true criminal activity going on?
That's what we're learning, to be honest. Like our motivation is to limit the overall criminal activity, but we also see that like many of our customers or potential customers, they are driven still by the feeling of guilt, or they don't want to get into trouble with regulators. So like in theory, many people actually agree that like all these like negative criminal things which are happening, human trafficking and like child labor force and so on. So these are ultimately bad, but on their daily work, they don't have time and passion to think and make investments. So they think that, okay, we need to be compliant. We don't want to go into prison. We don't want to get 100 million fines. That's driving them, and not the financial crime itself, right? But like what we are like trying to achieve is to get in addition to being compliant, we're trying to make it clear for them that guys, just have a think like why the heck is this compliance needed, or what is the meaning of the law? Like why did Parliament write down this law? It wasn't meant to like punish you. It was meant to protect our society. So this question of education, again, it's not easy, and it's not. It would take a lot of time and effort, but that definitely helps to expand our mission as well. So yeah, it's twofold, like being afraid of the non-compliance and being interested in the crime fighting.
Yeah, okay. So let's move on to your current progress with the project and let's start with ideal customers. Who do you think will be the most like immediate customer groups for the solutions? Banks we mentioned already, and beyond banks?
Well, yeah, like there are banks are also in different sizes. Like there are large banks like HSBC and Barclays, and then there are like medium-sized banks, and then there are small banks, and like actually there are tens of thousands of these kind of small banks. So currently we're working with this small-sized banks who are like relatively agile, or like agile is maybe the wrong word, but it's like much more faster than the large banks, because the sales cycles for the large is super long. So that's one segment, the small banks, and then second segment is like financial technology companies, fintechs, money service businesses. Again, relatively young, new companies who are just establishing their products. Some of them are in the beginning of their growth already, and most of them are located here in Europe, basically thanks to the same time zone and activity which is happening over here. So this is our current customer segment. The ideal and like longer term, of course, like we're trying to climb up in this ladder, like after we're earning credibility and the trust amongst these starting groups, then we're trying to get bigger and bigger customers. Because again, thinking back to the mission, the real money laundering is happening. Like most of the dirty money is flowing through the really large organizations, and the small ones are suffering, not suffering too much in that, luckily.
Yeah, what about crowdfunding platforms? Could be also
it's like
one of those.
Yes, like there are actually the wider scope that we could address. Like once we have power and time, all the regulated entities, like there's notary, there's real estate, there's online casinos, there are like investment agencies, so on. So they all need to fulfill AML requirements because they are risky organizations. There might be some dirty money flowing through them. Insurance, like just these kind of organizations where it has some evidence that okay, they might serve some criminal proceeds, and ultimately we would like to help them as well. But again, when looking statistics or like the global numbers, then like maybe 80% or like something like that of the criminal proceeds is still moving through the large banks. And so like these other segments are good, like for a startup to grow, of course. Like I'm not targeting that to make some revenue and some new customers and learnings, definitely. But the real problem luckily doesn't stand with them. It stands still with large banks.
Speaking of earning, what's the model for your SaaS platform, and if you can share how you plan to earn money?
Basically, we're selling license, like annual license, like there's monthly billing, but and some onboarding fee, and like usually when our current customers or like future customers, they're using the existing products in the market, which are like we call it legacy providers, where the product is like a price of the product is in hundreds of thousands or sometimes in millions of euros per year. So for us as a startup, it's quite easy to offer like better price simply because our costs are like much lower than the legacy providers. That's not the only benefit, of course, but it's like quite easy to be the price competitive in that sector. But definitely, if we're selling like business to business software to the like financial entities, it's not the price points are still pretty high if you're looking from consumers or small medium business size.
Yeah, but anyways, to be more specific, how would you evaluate your license fee? Is it by the volume of database, or by the, I don't know, financial parameters of a bank? What's your idea for that?
Yeah, when we're working with the banks still want to get the fixed fee. Like it doesn't matter based on what it's calculated. With fintechs, it's more interesting. They are we're charging them based. There's a flat fee, like starting point, but if they keep increasing or growing, we charge either based on the transactions, number of transactions, or number of customers. And the point is that the customer or transaction is actually the object that they are checking with this product. And also they're thinking like fintechs are measuring their own cost base, like cost per transaction, like not only AML cost, but also like the CS and onboarding and everything else, cost per transactions or cost per customer. So So that pricing fits very well into their own cost calculation model as well.
How long it would take to integrate your solution to a bank from A to Z?
Well, it depends a bit on our product as well, but the integration, it usually it should take a couple of months.
Okay.
Which is this if I'm telling, I told you before that they have huge databases. It's not only about that; it's also about technology which is around these databases, and usually, quite often, the one bank doesn't have uniform infrastructure. One bank is usually put together by many different banks, which had different systems. So integration against these different combination of systems, it's extremely complex task.
Plus very often outdated frameworks and so on.
Exactly. So just to
COBOL
compare
and whatnot.
What we have learned from the competitors, usually their integration takes 1.5 to 2 years. Integration only. I'm not talking about negotiations or anything. So, but thanks to the fact that our own technology is quite modular and flexible, so we see that we can at least cut the time from our side, but we cannot cut the time on the banking side because their infra is still the same. So.
And the pricing tag would be different from bank to bank based on negotiations and so on, right? At least
yes,
the beginning.
Yes, the size is different, the complexity of integration is different, and so on. So.
Yeah. Okay. Taavi, thanks. Let's move on to round two, the competitive landscape. Who do you think, or who do you call your strongest competitors right now?
There are three types of competitors. Ones who own maybe 90% of the market are this, as I said, the compliance, legacy providers who are focusing on being compliant and not on fighting the crime. So it's basically tick boxing software. And there is many of them, also large software providers like SAS and Oracle and there's Nisactimize and Tonbeller and really well-known names in this industry. And they are there, every bank has tried a couple of them. Banks usually are quite unhappy with usability and with functionality of those, but they haven't had anything better to select from the market. But they still own the biggest part of the sector. Then the second competitor group is the companies themselves, fintechs. As I built in TransferWisers when I worked there, I built our own AML technology in-house, and I was super happy with that. And many other mature fintechs are doing that. They're they have enough engineering power, they have enough product knowledge, and so on. So, but I'm trying to tell to the fintech that you're not building your own email system, or you're not building your own Google spreadsheets. Why the heck you should build another standard software? And it's removing that competitiveness. And the third category is startups like us who are creating a confusion. As you said in the beginning, there are a lot of terms like AML and CDD and KYC, and people keep mixing them up. So the product, everyone says in that industry, that this RegTech industry, everyone says that we're doing AML and we're doing KYC and stuff. But actually, when you zoom in, these services or these functions are very different that they offer, and there's very little overlap or very little competition when you go down to details. One is offering document verification, another is offering customer background check, the third one is offering transaction monitoring, fourth one is doing sanction screening, fifth one is selling the sanction list. So there's 10 different functions, or over 10 different functions, and each of these is trying to resolve it from one angle or another angle. So in that sector, of course, there are some competitors. When going into RFP competition, then I see some names coming up over and over again. Sometimes they win, but actually in detail, we know that what are the differentiators of the product. So these are the three competition groups, I would say.
And so the third group, startups like yours, I understand you say that their deficiency is that they are providing granular functionality rather than thinking to create a kind of a spirit of cooperation between players in the financial markets, right? Because are the other companies also trying to create an ecosystem of financial market players using one tool, or do you
Yes, like there are
do this by yourself only?
Yeah, like it's starting to happen, I think, now, because like with many of the same industry players who from the distance they look like a competitors. Actually, we have had a good chats with them and realized that okay, actually we can support each other, like, because they are selling one piece and we're selling the other piece, which is almost connected as a Lego piece, but it's supportive, it's not competitive. But as all of us, like, we're pretty young, and we need to like win our some decent customers, then it's in theory this cooperation should work. In practice, like, there isn't too much overlapping clients to help. So, but in a couple of years' time, I think there's like a lot of these partnership networks will come out from that.
Taavi, let's move on to round 3 of this podcast: companies' ups and downs, successes and failures. Let's try to avoid those related to the pandemics and so on. And let's start with the failures in the last 12 months. So what's the biggest failure you could mention? Your own or companies as a whole?
Yes, like of course, like some of the failures are like a classical, that we really wanted to win this particular customer because we could have learned with them a lot, but we didn't, because our like sales capabilities were not enough high level, or we didn't have trust enough. We didn't have nice portfolio which would support. So these are like, I think, pretty common. But one of the big like, I won't say failures, but learnings is that I've heavily estimated how long it takes actually to find this right product market fit. Okay, sometimes it might be really fast, but in our case it is pretty slow. So as I said, like, have launched different products, we're addressing different market segments. We are able to do some sales and it's increasing, but we haven't found the real honeypot where we would like to put all in and would want to focus. So we're still in the search mode. Although it was 1.5 years ago already when I thought that, come on, we have the product, we have the market, let's go and start selling. Actually, I was wrong back then, and since then we have been iterating and learning, and still every new hypothesis feels better than the previous one, but we haven't proven that actually this is the best one now.
They say it's a blessing in disguise for somebody else, but it could be a curse in disguise for you as well, if you cannot focus on a specific product and work on it and have to pivot or expand your product line all the time.
Yes, that is definitely a risk, that focusing on too many good things actually splits our effort and we are not able to deliver anything. So
yeah, and that's a challenge for you as a founder as well. What about the biggest success you could mention?
I think our team as it is, like, I was somehow, as I said, like in Estonia we have like 1,300 startups and super exciting landscape, but it also means that for me as a founder to find really great team members, like founding team members and investors and advisors, it felt super like difficult or unknown for me. And then it took 6 months or like 8 months to get to the position where I went to interview or just for a coffee chat with some people. I wanted to get their advice, like just only they were like idols for me and super smart, like in the banking sector or like in the UX or in the startup sector. And I was happy that I got 1 hour with them to have a coffee break and to learn something from them. And when I realized that during that coffee break, they actually started to pitch themselves to me, and because they wanted to join my team, then I was like, oh, what's going on? Like, and it didn't happen once; it happened many times, and thanks to these kind of good chats and my confidence has increased that I can hire any talent that I want to, because people care about the mission that we have selected. People care about the
Yeah,
strong
yeah.
team, the foundation that we have already. People care about the culture, and they know that with a great team we can build anything, we can achieve anything, and that's why I'm pretty confident that to give a try and over again with these different approaches and product, because I know that we can consume them and we can absorb and learn and execute. And that's a luxury that many of the teams are spending much more effort to get to that point.
Yeah, great story indeed. Taavi, let's move on to round 4, company, and we usually start with the founding team. You mentioned on the fly the team that you managed to aggregate by now successfully. And let's cover first the founding team. Who are among your co-founder, fellow founders, and then we'll move on to the company.
Yes, we have my second co-founder is first co-founder is Jeff McElland, who's Canadian friend and colleague, has been living here in Estonia for 11 years now. So he worked in my team in Skype like 10 years ago, and then I moved to TransferWisers, and then I invited him to join TransferWisers. So we have been working pretty much together side by side for more than 10 years now. He's also a really strong analyst, but he has been more focusing on marketing and people teams, and he has developed many of the software skills as well. So he's in Salv, he's currently covering the people aspect and marketing and sales, kind of finance, stuff like that. And there is a second co-founder, Sergey, who is he was working in TransferWisers in the same team as engineer, engineering lead in the compliance team, and he's now like head of engineering in Salv, so he's taking care for the actual product building, or like technical building of the product. Yeah. And like in my job is to look after the product. We have also our product lead as well, but product and vision and like related areas around that. So.
And screen time. You have to do the screen time as well, right?
Yes, that's true. That's my role.
So what's interesting, like Sergey, Jeff, and you, Taavi, you all had experience of working together previously, right?
Yes, exactly. So I knew that whom I was inviting into the team.
What about the rest of the team? How many people in the team, and what's the division between tech, sales, client-facing, or other departments?
Yeah, currently we have about 30 members in the team, and about half of us are working with the product and engineering and design, and the other half is dealing with the customer success and marketing and different support functions over there. And these people are like mostly, like most of them are actually coming from our quite close network, either former colleagues or like friends of friends, or so like and that was also like where the strong founding team actually helped the next people to be confident that okay, it's the right thing to do.
And are these 30 people currently in an office or mostly remote? And where is your headquarters?
Yeah, headquarters is in like Estonia. We have 2 offices actually, one in Tallinn and one in Tartu. It's like 200 kilometers away from each other. Most of them, I think, working from home now, but there is no strict policy for that. Like everyone who's willing to come to office, that's super fine. And I think that's the luxury of the small companies, is that like the risk of the corona and everything is still pretty low. Like if we would have 300 people, then we would need to worry much more about coming into office. But if it's like a random day, there is like 1 or 2 or 3 people in the office, it's not a big hassle. So it's quite open. Everyone can choose what they want to do actually.
Okay, interesting. So you have those 30 people or so as full employees and in 2 offices. And why 2 offices?
It's just
What's the logic?
It's just like some talented people don't want to move their home down, and like they're 2 different cities, not super far away, but still like talent that pool of talents is still quite limited. it's possible to bring new people into Estonia, but still need to do a lot of work. And actually, opening one small office where some smart people are, it's like one easy thing to do, and to engage the talent over there.
Yeah. And as far as the team right now, are you hiring? Are you looking for new talent?
Yes. Actually, we are like quite constantly, but especially now we're like looking to find new full like product engineers who would have like full stack knowledge in Java, and who can do the front end and back end and databases. So yeah, full stack developers is something that we're now looking more than ever.
And you will focus on what, physically being close or in the office, right? Or would you go for remote team members? I mean, from other countries, continents, time zones.
Yeah, like it's we don't have a hard limits that no one who's not very close to us cannot join. But time zone difference would be the showstopper. If someone is on the other side of the world, it's like hard to work in the same team. But like there are luckily enough people in the same time zone where we are, like in the Eastern Europe. So, but yeah, like it's like so far, I think all the people that we have hired are physically based also here in Estonia. So it's like legislation-wise, like it's easier. Job contracts, option programs. Like not all the countries have the flexible startup option like conditions. So like there are some technical details why it's easier to hire people from here, but yeah, for sure, like if I find really good talented people outside, it's not limitation either.
Taavi, with this, let's move on to round 5, and this will be about funding. We call this formally F3, funding for the future. So by now, the total funding was around 3.5 million euros, and with this runway, when do you plan to have the next financing round?
Well, I would say that no later than summer next year, because we have pretty decent runway and we are still not in the active sales mode. So we're on the product market fit search, which means that we need to keep our cost base quite steady. While saying that, actually, like whenever we see that, okay, we feel and see that we have one specific segment, or like we know how to enter into a specific segment, and there is a clear value proposition provided, then of course like we want to increase our costs, sales costs rapidly, and then we would need to raise a bit earlier or much earlier. But yeah, like the current like a conservative estimate says that it's still a long time ago until that point.
Mm-hmm. And just to make sure, you mean summer 2022, right?
Yes, exactly.
Yeah, okay, great. So seems like a comfortable time and period for polishing the product market fit. Okay. And as far as investors, by the way, who would you say are your ideal profiles of VCs for the future round? If you can define them somehow.
It's hard to say now, because we have been selecting VCs also based on the, like in addition to money, what's the added value that they can bring in terms of their industry knowledge, regional coverage, links to other people, different aspects, and now like Seed Camp and Fly Ventures and Passion Capital, and they are like fintech, European fintech investors, and like with a good sales, early phase business development focus. So that's like was really good to select them, depending on the actual market that we win, exact product that we can attract them. The selection of VCs might be different. Maybe we need someone from Singapore, maybe we need someone from US, maybe we need someone from core banking, maybe someone from like insurance, like that's but naturally, like we are already like some early level chats with the tier 1 VCs going on already, who are like part of the wider network, because like this network, like VCs are all networked themselves as well with other VCs. So it's like definitely there are some more preferred options available.
would you be open for a corporate venture capital contribution or somebody from banking or financial sector, CVC, joining the company? With all the limitations, of course, of future development, I guess.
That's actually the we prefer not to. That's the reason that this kind of strategic investments strategic investors sooner or later might start driving our focus on their preferred direction. So the more classical VC investors, if they have made this choice to invest into that team and into that product, then they're letting us to be more free. So definitely this kind of corporate strategic investors are not our preferred first choice.
So right away, corporate VC funds from financial sector, please don't contact Salv. You will not be in the first line of interest, so to say. Taavi, what about the exit strategy or vision for the exit? Do you have anything crystallized already in your mind, and that is too early for you?
On one hand, it's too early. On the other hand, it's that's not why we are building this business and product. So I've been thinking about this, that there would be much easier and more certain ways to make good money, or to sell something to other people. So building a startup is still a very irrational thing to do, and exit IPO or whatever acquisition is something that for some companies it happens sooner or later, but that's not the main driver for us, because we want to actually get to the point where I feel that we have made some change in the global crime, and we want to get to the point that where we can say that our product actually are helping our clients to beat financial crime. And once we get to that point, then we can think to okay, what's next? So but this is the first really significant milestone of our vision, that maybe in 5 years time, maybe in 6 years time, we get to the point that actually some major banks can find more crime thanks to our product. So that's what's inspiring us, not the exit per se.
Taavi, thanks a lot for the chat. It's definitely, we see the beginning of something big and potentially disrupting for a huge industry. Wish you all the best, and this is your 60 seconds of a spotlight. If you want to say anything to your future clients or investors, that's the time.
Yeah, thank you for that. It's there are things that banks and fintechs and financial institutions are doing because it's useful for their customers and their business. So there are things that they're doing because it's legally required and they need to do that. But we are encouraging people to think also about, okay, what is the footprint that they're leaving if they're not doing things properly, and if they're actually not understanding and following what's the idea of the legislation around anti-money laundering. So I couldn't work in a bank or lead a bank where I would know that I'm not putting enough effort in to reduce the drug trafficking, or reduce the money that's earned from the drug trafficking going through my bank, or human trafficking, or weapon trading, and if I of course it's not the main goal for my bank to stop the crime, but if I'm acting in a way that I'm not focusing on that, then actually I'm not a good citizen, and I need to change. So that's something thinking I want to put into heads of our current and future customers, that don't think about only being formally compliant, but think also about what is the actual meaning of the compliance, and how can you actually help to beat financial crime with your organization.
Taavi, all the best with this project, and we'll be following, of course, on the go, and hope to be in touch with you later on at your future milestones achieved.
Thank you very much for this time, and all the best to you also.
Bye-bye, all the best. See ya. So today's guest, Taavi Tamkivi, the co-founder of Salv, has been already involved in huge and successful companies in both Skype and TransferWisers. Taavi focused on cybersecurity, which has now led him to create his own company in the same area. And potentially, as you have seen, this cybersecurity toolbox has the potential to be a disrupting element for the traditional and new age players in the banking and financial services industries in the cybersecurity areas. Let's keep fingers crossed for their product market fit and, conquering the financial world as soon as possible to help fight the crime. That's it for now. All the best. Bye-bye.